Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Now, before I start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, or analysis on any of the or any related items on these, my charts. This was my own original work, as I think you deserve to have that. So with that, Chicago wheat. The dominant pattern here since, well, once more remains a dark blue mid-February to mid-June bearish shift pitchfork, with the dark blue upper time currently at 554.5, specifically being tested in early and mid-November and withstanding the upside pressure. We also have a new possible pattern which I will detail shortly. The current base of action had been, possibly still might be, the ragged mauve medium moving average currently at 535, and maybe added to by the green short medium moving average currently 536.5. A closer support, not really tested yet in recent days, is the March 24 low at 523.5, tied in with the interesting combination of the August 24 low and the 38.2% absolute Fibonacci line, both at 521 even. Interestingly, the gold long moving average, currently at 543.25 above, which in early and mid-November did not play much of a role, now seems to have reverted back to type and is trying to cap rises, much as it did in September. Now, I said 4 weeks ago, and I quote, it's a long quote, they have heightened the idea of the August to October action being a possible if somewhat wobbly double bottom. Hence, I've laid out some potential targets above of a primary target X up in the 582.75 area, and a secondary, harder to reach target X1 up in the 598.5 area. These of course depend on the market breaking the dark blue upper time, which is no certain. So I would keep an eye on the main pattern, which is the dark blue bearish shift pitchfork. End of quote. Well, the pullback from the dark blue upper time and the reinvigorated capping of the gold long moving average threatened that whole idea, and I highlighted that whole idea 3 weeks ago, and especially last week, enough that I will now retire both target X and target X1 after today. Additionally, I also said 4 weeks ago, and I quote, the action itself between the last week of October to date looks like a possible small double top pattern, and we are on the verge of triggering it, with moves below, if not closes yet, below the September 2020 low. These actions offer potentials, not targets yet, but potentials of a primary potential down in the 524.75 zone and a secondary harder to reach potential down in the 516.25 zone. These of course depend on confirmed consecutive closes below the September 2020 low. End of quote. Well, there's a lot to unpack there, so let's start with formalizing targets of target X in the 524.75 zone and target X1 down in the 516.25 zone. Now, I know the low this week is at 525.25, and I could call target X having been reached, but I will still leave it open for now. My only concern about this double top pattern was that the market might be forming a shelf or an extension. However, that now seems unlikely, or if it did, it was quite a small shelf. This ties in with my final point from last week when I said, and I quote, I would lower the trigger point now to confirm closes below the 535 zone for now. End of quote. We've had that, so the pattern is in effect. Chicago corn. The gold long moving average here, which is currently at 40.38, this had previously done an excellent job in capping prices in late September, though not so much in mid-November, and finally dipped completely below the market as we went into December, even becoming more of a support and even started to act as a base of action as the market crawled sideways. Above the market is the 50% Fibonacci line for 2025 at 454.75, which looks a seemingly formidable resistance, because just above that is the very shallowly bearish bright red trend line, currently at 456.5, and that's the July 23 to January 24 descending triangle, which managed to cap prices 4 weeks ago. I'd previously had my doubts about this trend line, despite how large the pattern it related to once was, but it is looking like it means business now. On the downside, we have the now flatlining green short medium moving average, currently 441.25, which, despite an aberration 3 weeks ago, seems to be willing to act as a sort of support, just above the previously mentioned flatlining gold long moving average. Just below this green short medium moving average, we have the November 2020 high at 439.5. But in truth, that doesn't look like much support right now, so we'll have to look all the way down to either the gently rising mauve medium moving average, currently at 430.75, or down further to the important 50% absolute Fibonacci line at 425, which in turn led to the October low at 425.5. Any such possible move lower would be the one to watch, as it may well determine the future health of this market, as prices seem right now to be willing to just hold. Kansas City wheat. Okay, as I said 6 weeks ago now, we have a major issue here, end of quote. The bright green upper time, currently at 518.75 of the March to June bearish shift pitchfork, has been broken, but the market is not letting go of this bright green upper time, something that is not unusual to see in such situations, as the market is using it as a base sliding slowly down along the top of it. Additionally, the flatlining mauve medium moving average, currently 526.25, and the flatlining green short medium moving average, currently 525.75, are both now acting as attractors to the market and seemingly moving over to a capping function with the addition of the 38.2% absolute Fibonacci line at 532.5. Further up, we saw back at the start of November and also mid-November the combination of the March 2024 low at 551 and especially the declining gold long moving average above, which is currently at 540.5. All capping rises. All of this capping rises. The declining gold long moving average is still threatening to do that should prices rise that far, which at the moment seems unlikely. This all led to the following scenario, similar to Chicago wheat, of an August to October double bottom for primary target X up at 575.5 and a secondary hardest to reach target up in the 591.75 area. What is stopping this, apart from the obvious gold long moving average and March 24 low, plus now possibly the mauve medium moving average and the green short medium moving average, is further above the dark blue lower trend line to the November 23 to April 24 descending triangle. That's currently at 556.25, and also the March 21 low at 559.5. To be honest, neither of these last two are all that good, but there are enough obstacles in the way now that I will retire targets X and X1 after this commentary. In the meantime, we have over late October and November developed a double top which prompted exactly what we have seen, prices starting to slide down the bright green upper time and set up a trigger for a move lower. I said 3 weeks ago, and I quote, "This drop had been enough, even though they were not as yet confirmed, to indicate potentials below, short-term potentials, that may not affect the topside targets X and X1 above, but would still require close assessment of the market, if these new ones are reached. Thus we have a primary potential down in the 518.75 zone, a little under today's low, and a secondary harder to reach potential down in the 512.25 zone, just above the bright red unreconstructed 1999 to date uptrend, which is currently at 509. End of quote. Yesterday we saw the market dip to the primary potential down at 518.75, leaving the secondary harder to reach potential, which I will now formalize into target X2 down at 512.75. For a bit it looked like the market would make a shelf, but if it did, it was small. Now, last week I said, and I quote, "These are still potential targets below for this immediate pattern, but instead I would lower the trigger point now to confirm closes below the 520 zone for now." I know this doesn't help the primary potential, as it could be argued that we have already reached it with a low of 519.5 2 weeks ago. Well, that's actually now 3 weeks ago, when compared to a primary potential of 518.75. But I'm looking at the whole pattern. For this, I think it deserves such a realignment, especially if these opportunity to even look at the whole recent action as a possible head and shoulders top, or even a small bear channel, such as we had between September and October. And that's the end of that whole quote. This acceleration in the idea has been brought about by the action this week and the bright green upper tine moving below 520. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.